Thank you for the invitation to speak. I would like to focus on what the situation on US markets has shown since Trump's tariff announcements on 2nd of April. To summarise the outcome, within 100 days of Trump becoming president, he was taught a brutal lesson that US financial markets are much more powerful than his plans. This was shown clearly by the sequence of events. On 2nd of April, the misnamed Liberation Day, Trump announced a general US import tariff of 10% and high so-called reciprocal tariffs against approximately 90 countries and territories, including China. He declared this was one of the most important days in American history, but within a few days, Trump had suspended most of the reciprocal tariffs for 30 days, with the exception of those against China. Then even some of the tariffs against China on smartphones and some similar products, although not the overall tariffs, were suspended. This rapid retreat of Trump from his 2nd April announcements was driven by the threat of negative shifts in US financial markets getting out of control in response to his announcements. Trump's decision made clear he would make tactical retreats to keep these financial shifts within normal bounds. The sequence of events therefore makes it important to understand. First, the forces which compelled Trump to make a tactical retreat. Second, how close did the situation come to getting out of control? Or, put in other terms, how large was Trump's margin of safety by which his administration was able to calm the financial markets? Third, has this forced Trump to change his strategic policy, or was it simply a tactical retreat to allow the same strategy to be maintained? Let's start with the first question. What were the forces which compelled Trump to make his tactical retreat? Before Trump made his announcements on the 2nd of April, US financial markets had been trading within normal, cyclical and short-term ranges. Let's consider the main indicators in turn. Start with the dollar exchange rate. The Federal Reserve's trade-weighted dollar exchange rate index during the last 3 years, that is since April 2020 and US recovery from COVID, has been trading up and down in a relatively short range between 114 and 100. In particular, during the period from the end of April 2022 up to the 1st of April 2025, it had not fallen below 99.8. On 1st of April, the dollar exchange rate index was 104.3. Its recent peak was 110 in January 2025. From the tariff announcements on 2nd April onwards, the dollar began to drop sharply. It fell by 5.7% by 21 April to a low of 98.3. This level was significant as it broke through the bottom of the previous trading band. However, after Trump's tactical retreat, by 25 April, the dollar index had recovered to 99.5, only very slightly below its previous trading range. Trump's tactical retreat was therefore able to limit the fall in the dollar's exchange rate. Second is the situation of the US bond market. Ever since the depth of the COVID crisis in March 2022, US Treasury bond interest rates have been rising sharply. They reached a peak of 4.95% in October 2023 and in the more recent period at 4.79% in January 2025. After Trump's announcements, US Treasury bond yields rose rapidly from 4.16% on 1st of April to 4.49% by 11 April. But then, after Trump's tactical retreats, they fell back to 4.24% by 25 April. That is only slightly above the 1 April level. Therefore, the bond market was also brought under control by Trump's tactical retreat. Returning to share prices, these had already started falling well before the 2nd of April tariff announcements. The S&P 500 peaked at 19 February at 6,144. By 1st of April, it had fallen by 8% from its peak. It then fell further after the tariff announcements, reaching a low point of 19% below its peak on 8 April. But following Trump's tactical retreat, it then recovered, and by 25 April, it was only 10% below its peak, not dramatically below its 1st April level. No bear market in US shares has started. In summary, Trump's tactical retreat made it possible to control the situation on US financial markets. What conclusion follows from this sequence of events? First, the US financial markets did not get out of control. Trump's tactical retreat was able to bring them back under control. Second, Trump was not prepared to risk financial markets getting out of control. Therefore, he was willing, or was forced, to make a tactical retreat to stop this occurring. But Trump maintained his main strategic goal of attacking China. China was the one country against which Trump maintained almost, if not quite all of, the entire high range of tariffs. To summarise, the facts indicate Trump is continuing his strategic attack on China, but he will not allow US financial markets to get out of control to do so. Or, put in other words, Trump will continue his strategic attacks on China at the pace that conditions in US financial markets allow him to do so. But so far, the US financial markets are not out of control, and Trump will make tactical shifts in order to make sure that they do not get out of control. Thank you very much.